live. We are officially live on Facebook or on YouTube. Wait, is your sign lit?
It is. It's just so bright in here that you can't tell.
Oh, you got natural light.
No, that's a ring light.
Nice.
You know, you gotta get the studio lights.
All right, I want to be like you guys when I grow up. Like, you know, get the halo light in front of you.
Look, I want to be positioned like Jolene, so all the art in the background is perfectly centered. I need better.
Actually, the camera, it looks like it's crooked, but it's not. It looks like it is.
No, you're good. You're on point.
Well, okay, so we got everybody loading in to the live. So
yeah,
thank you everybody for joining us. We definitely made it on time this time, but we got a lot of stuff to discuss today. Like and obviously you guys noticed that we also brought a wonderful guest back to the show. We'll get to that later though. We'll get to him later. But Jolene, how are you doing today?
Well, you know, a player like me. No, just kidding. I'm good. You know, I'm so good. It's not even funny. You know, I'm in the mood to celebrate. I don't know about y'all.
Yeah.
I definitely have some things to celebrate.
Okay, so we're going to definitely talk about that today. Hello, everybody. If you can, go ahead and hit the like button. If you're not subscribed, definitely subscribe because we have a ton of content. I mean, we're working on, I don't know how many different episodes right now. It's
shows. It's not even just episodes. We got all kinds of stuff.
Yeah, we have shows. Like, so for those of you that don't know, yes, the Come Up is a series. It's not just one specific show, it's multiple shows. And it keeps us up at night every single time. How is it that we can be creative for each and every single one of you, but also make sure that it's very educational? Okay. All right. So tell us where you're coming from. Let us know how your day was. If you're feeling good, go ahead and hit the thumbs up. But yeah, try to send it also to other folks that you may know that would possibly want to hear about this, because we normally drop gems, but I think that today we may, you know, possibly drop some keys.
What? From gems to keys?
You know, just to give a snippet of what is it that we do at the Come Up. Right. I think it's best that we just, you know, maybe one or two keys, you know, tell us what you guys think. You know, we definitely want to see what you guys have to say about it. Thank you guys. I mean, you guys are awesome. Oh, love the shirt. Yes, I paused my game to be here.
Yeah. Nice.
There's no gamer.
Yes, I am. Whenever I have free time. All right, so let's get into it. What's up, everybody? I'm Mark Monroe, and this is. You are who?
I'm Jolene GC.
And who's this guy underneath me? Like,
oh my gosh, this is the homie. Hey, David.
Humble man.
Yes.
Hey, first of all, this is his second time being here. He couldn't get enough. He had to come back.
Absolutely.
For the gems.
He loves us.
Squad respect.
Yeah.
There it is. Squad goals. For those of you that don't know, he's also a hell of a producer / director / writer. And on top of that, working on some pretty dope content. Thank you, Sierra. I mean, for those of you that may not have noticed, we are definitely introducing something called the Super Chat. I guess YouTube finally unlocked it for us. And for those that don't know, we are going to be dedicating all of the proceeds that take place in our Super Chat today to, where are we sending it to, Jolene?
Oh, hold up. We're giving it to Life Enrichment Group. They have this awesome program called the Young Queens and Young Kings. And in particular for the Young Queens, they have a skincare line where all of the teens, all the youth, they run a brick and mortar store and they learn entrepreneurship skills. They learn marketing, they learn promotion. They essentially learn how to build a business and run a business before they graduate from high school.
That's dope. So just so that way you know, all the proceeds will be going to that organization, and we'll try to do that more often. So I guess if we can, should we just dedicate this entire week's worth of lives towards this nonprofit organization? We'll just choose a nonprofit every week.
That'd probably be good. Why not?
Yeah. So, you know, if you're feeling generous, if you love to throw in a super chat, I mean, definitely go ahead and do that, and it will graciously go towards young entrepreneurs in the making. So, but all right, y'all, we got a lot to unpack. Like, seriously, like, where do we even start?
Well, We do have a lot to unpack, but before we get to unpacking, I really do want to share what the CEO of Life Enrichment sent me about.
Oh, let's do it. Let's do it. Take it away.
It wasn't loaded up yet, so I had
fades to the distance, fades back to shadows.
Right. Okay, here we go. So the Life Enrichment Group has been actively serving youth in many communities throughout King and Pierce counties since 2003. During this time, LEG has been able to transform the lives of youth who are often overlooked in society at large. LEG's philosophy revolves around providing holistic and meaningful experiences for youth, which address the challenges that African American and other youth of color face on a daily basis. Youth are partnered with positive role models who most often live and work in the communities of the youth they serve, and also receive social, emotional, and academic supports to foster self-sufficiency and marketable skills that support personal, professional, and economic development. LEG offers 4 programs: Young Kings and Queens of Seattle / King County, the Scholars Project, Youth in Business, and Know to Grow. Some of the services offered are college prep, HBCU tours, culturally relevant mentoring, entrepreneurship training, paid internships at Queen Care, career development, and so much more. Y'all, you can go and visit Life Enrichment Group at lifeenrichmentgroup.org. They would love to hear from you. And I just personally love, not only do I love the CEO of this whole entire operation. Her name is Monica Matthews. She was actually one of the first groups who ever supported one of my very first visions after I left the practice of law. And I will always be forever indebted to her and her organization. And also just the amount of work that she does in the community. She is a pillar in the community. When you talk about like giving back to our youth, everybody knows Miss Monica. So this is a wonderful organization to donate to. So I'm excited.
That's what's up. So from this episode to also our Hot Take Thursday, if you definitely want to donate, then go ahead and just throw it in the super chat. I mean, we'll try to get her onto the show. I mean, if we can, just for her to, pop up on us and give us a little bit of a update on what's going on with her organization. And if you also know of a nonprofit organization that you would like us to definitely give a shout out to and definitely send some love to, I mean, feel free, hit us up on Instagram at That Come Up Series, and we definitely want to hear it. All right, so Jolyn.
Yes.
I hand it over to you.
What's up, y'all? Good afternoon and good evening, wherever you are in the world. This is Trade Talk Tuesday with the Come Up series. Let's get just right into it. Let's talk about this market. So the Dow was up 164.07 points. S&P 500, just a little trickle. They were up still though, up by 11.90 points, and the NASDAQ was up by 38.37 points. For our sector performance, we got energy coming at number 1, followed by consumer staples and real estate. And then in the bottom 3, we have tech, financials, and health. So today was a pretty interesting day with volatility. What was the volatility? I think about around 24.
Yes.
Okay. So, if it keeps going down, y'all, we will really be having a fun time in this market. I mean, I'm already
a little bit more predictable.
You're gonna see what happens, but I'm so excited because we have our brother Che here today, and he was here. It was not last month, maybe like 2 months ago. But your episode, man, the lessons that I learned from that still hold true. And so I actually want to know, I just want to get right into it. So we already know your investor story. We know how much money you lost when you didn't listen. We know about that, right?
We're here for recaps for those who weren't part of the story.
Hey, you should have took a sip on that one, Mark.
Hey.
Oh my gosh. But what I would like to know, what I like to know is, okay, so what's happened since the last time you were here as far as lessons? I remember you had like a pretty impressive run with RTH, and RTH just hit another 52-week high. So I'm curious, what's in your portfolio now? How are you thinking about planning for the end of the year and also looking forward to next year?
Okay. So I'm not in RTH my portfolio, but I'm in the XLY position, which RTH and XLY are very closely related. But XLY is where I made my bones in the game. So as Big Brother Monroe would say, you dance with the one that brought you. So that's what carried me here. So what I was able to do, actually, on that episode, Ernest had chimed in and he was asking about how you would restructure your portfolio. And what I had said on that very episode is, as your liquidity grows, what you want to do from there is you can take more risk, because I'm an ETF guy when I start out any investment, right? And that's to keep my risk lower. But as my ETF portfolio grew and I noticed that I was overexposed, so there's going to be some pros and cons to the story I'm going to tell you right here.
All right.
But as my portfolio grew and I noticed I had a lot of exposure with XLK, I wanted to now move that liquidity to a single position. So I took the money that I had made from there and I moved into a singular position. And I like to try to catch growth stocks on the bottom. So if I could buy a growth stock on the dip, I'm definitely here for it. And I was definitely able to do that with some guidance from Mr. Monroe. And I moved myself into a Netflix position, which just went positive today. So now we're on our way up, the come up, live in color. But what happened was, to move that liquidity to get into that great Netflix position, I had several positions in XLK. Now, as we've all watched XLK evolve and grow.
Fuego.
Ooh-wee. You know, now this is that hard lesson as an investor, because you're always looking for the next strategy, but sometimes you just don't know when you sit still.
Come on now.
He will come through.
Oh, you better do that.
Hey, come on now. So if I had just stayed still and I knew that I was invested well, while today was a beautiful day, it would have been a phenomenal day. But I say that to say, all of us have done the research when we put into our investments already. And sometimes you just got to know, if you got time left on those options calls, let it ride out. You got plenty of time. You can make power moves after that position. Now, for me, I thought I was a little overexposed. XLK technology. Of course, everybody's been talking about, oh, technology just keeps running up. Oh, it's overheated. So I was like, oh, okay, I got January 2022, so I'm feeling good about it. Let me take away some of my January 21 positions and leverage something else. And the nice lesson here is, while I'm still liquid, I could have been more liquid if I just stayed patient. So right now, I've moved into my singular positions. I have my long 2-year or year-and-a-half call still in place. So I'm feeling very good about where we're going and where the market's going, especially when you could catch something on the dip. There was another part of your question that I wanted to address, as far as you said portfolio. Yeah, the singular positions of Netflix. Now, one thing that this is new for me as my liquidity grows and I want to try to explore and do more research. I moved into another position called NIO. It's the Chinese car group that moves like Tesla. So I'm really interested to see what that's going to do, just because my liquidity game isn't quite Tesla options call ready. At least in my personal opinion. I've had several conversations about this, but I want to see how getting into that kind of position and getting some, we'll call it international exposure, would affect the portfolio. So definitely, switching it up, trying different flavors to see what works for your portfolio and what doesn't, but always making sure you got enough time on those positions. I never want to be caught in anything like a 1 week or a 2-week call. I'm always giving myself time to abandon this and to abandon those positions and keep profit on the table for myself. And we don't want to deal with, I believe I talked about it last time, that FOMO kind of mentality, fear of missing out. I'm okay with leaving money on the table as long as I left with something to eat. So we're good to go. My theme becomes, you got to have the vision. You got to see what the future is going to look like, invest in that future, let yourself march towards it. So I'm feeling good about my portfolio. And I really think XLY's got some legendary moves coming up in a couple months. So stay tuned, y'all. Stay tuned.
You don't want to give too much, but you know what's funny about Che, about what you described about kind of like shaving off out of your XLK a little early so that you can get into a singular position, namely Netflix. Yep. So in my Tesla account, I did the same thing. So I had I was stock heavy and ETF heavy, and I ended up selling everything and just had straight liquid, and I put it all in Netflix.
Nice.
However,
I'll pull up my chair.
Hold up.
Yeah, hold up, because I put it in Netflix. But then I got into Netflix too early. It was still trending downward. And when you have, this is part of the growing pains of it as an investor. That was my first time doing something like that in a singular stock. Yeah. And as it was going down, I knew it was going to go up. But also just the patience wise, I just was like, man. And so who hit me up. Oh, yeah.
Was it Bobby Axelrod?
Say that again, Mark?
Was it Bobby Axelrod?
Was it the Dark Knight? Did you put the signal?
Mark called me.
Mark, oh, it was Mark. Okay.
Mark called me. I like to call Mark the matchmaker because he's the reason why I left Netflix and got back with my bae, SMH.
Oh,
and who had a 52-week high though? Yeah. Who had a 52-week high?
That's amazing.
Okay.
Oh, okay. Oh, you got to point that thing up. Okay. Put it up.
Yo, it was like, we're going to talk about that later because it's not really about me. We'll talk about that later towards the end of the show. I'll tell you what happened. But yo, it's just like the honeymoon period. I don't know. I don't really care right now. All I know is that it is all good in the hood. And when you go from, it was cool to dip into the singular stock, but I'm curious about what were you dealing with, like mentally when you were doing, like what were those stocks before you sold out of XLK and then you're just like Netflix? Because it's paying off now, but I don't know when you got in. But when I got in, it was still going down. So what point did you get in? And then tell us what you were thinking.
Okay. What's going on? And because we are entrepreneurs on this program, and a lot of us have investments going, we have business deals going. Whenever I first set myself up, especially when you're buying something on the dip and it's going to be a singular position, off the muscle, I knew I was taking on more risk, and I knew I was putting my liquidity in a riskier position. So yeah, I had to ride that down a little bit with it as well. It wasn't too big of a hit, but it was still in the red. And one of my things is I like to check my performance charts on my E-Trade. So, I'm watching the performance drop, but then I just focus my mind towards, okay, let's wait for it to bounce back. We'll keep an eye on the market. But this is like key for me. And I think even for the people that I talk to when I'm helping them out with their portfolios, you got to have other things that you got going in the fire. You don't just want to be doing one thing and constantly watching the market and then kind of waiting for the next day. So when I'm seeing it's a red day and, the famous saying that I hate to say, it is what it is, because that completely takes the control out of my hands. But when it's the market, I already did my research. I already made my investment. So it literally is what it is at that point when it's a red day. I switched my mind over into building out the content for the film that we're doing. I switched my mind to talking to our other producer, Steve Arsenio, about producing more content that we could get the great people for this program. So I just want to keep my mind rolling on what's the next progressive thing I can do. Because for me, this is all about legacy, right? And so I'm thinking of what's going to be the next thing that gives us wings, or myself wings, or my family wings, so we can take off on that. So I don't let my mind get wrapped up in what's being lost. One, because the vision, I'm gonna just nickname myself that right now, the vision. Because the vision is you bought the time so that you don't have to do that. The only time that I have to start worrying and panicking, technically from a strategy standpoint, is when I'm running out of time. But I never allow that to occur. So therefore I have the time to go do other things that I want to invest myself into and my family into to make sure that we're going to be progressive in the future.
Can I ask you a question? So since we're talking about strategy, and I can ask you guys both the same question, and then I want to get to some of the questions that we have on YouTube, because I mean, the comment section is definitely lit like we've been on our side. So you can only imagine how lit it's going to be in the question section. Okay. All right, so let's talk about this, because I mean, I think we can all say that 2020 is like over. So I think
some time
to 2021 or 2022, what are you guys looking at as it pertains? What's your strategy going into 2021 and 2022? What's your strategy play?
Go ahead, Jay. You can go.
Okay. My strategy for 2021 is I'm really looking for a consumer boom in this upcoming year. I think that right now we're biding our time with the virus, and of course, everybody that's watching CNBC or reading the analysts and the comments on what's going on, it's all about what's going to happen with this virus. And I'm not so much worried about the China trade wars, because my thing becomes, when we get this virus under control, I've been to, like, when I go out, I see way too many people out in places that I don't think they're supposed to be with no mask or anything on. And I'm like, man, the consumer really, really, really wants to take off. And because I've positioned myself in a lot of consumer positions, XLY, I'm thinking out loud, like, man, as soon as they allow it, it's going to be an SMH run. And I think we're going to be touching new all-time highs. So I'm betting on the consumer for 2021. And technology is like, where else are you going to go right now? If you're positioned in any technology sectors, those are just winning, and it's kind of hard to bet against them. And one of the big things that keeps coming up is like the bubble of 1999. While I was definitely not an investor in 1999, I got to think to myself, I don't know if the companies that went under in that time had the kind of liquidity that these other companies have right now.
I can actually speak to that if you guys would like me to.
Absolutely, please.
Yeah.
Okay, so when we talk about 1999, because a lot of folks talk about the fall of 1999, the dot-com boom and everything else.
Yeah.
Now, here's the problem that a lot of the folks that, or the quote unquote analysts and pundits, won't talk to you about. So of course, as you know, we at the Come Up, we like to tell the truth, and we believe in the truth. Right. So here's the truth. All right, so in 1999 or 2000, you had a lot of dot-com companies that were just coming out of nowhere, and there was tons of liquidity that was just being thrown at them. Just you had an idea, or homegrocer.com or whatever it was some kind of .com, and it had some type of idea. Then investors, VCs, angel investors were willing to throw money at it. And there was so much liquidity that was being thrown at it, but yet at the same token, none of these business models were really even solid. Most of them were just business plans that you would just receive. And really, it's like they weren't really executing on the business model. They weren't really hitting on any of the key performance indicators at all. So when you think about the companies that were also immediately going IPO, and yet their companies were kind of like considered half-baked, like, I'll get into that later, because there's another company that, kind of reminds me of that.
Yeah, it's coming.
All right. So pretty much you had those companies, all of a sudden the music stopped. Mm-hmm. And then now everybody, like, imagine like musical chairs where the music stops and everybody's running for a chair. Now, the companies that don't have any type of business model that's strong at all, then they didn't have a seat. And ultimately they got removed from the game of musical chairs. Yeah. And so that's what we saw. We saw a flood of companies that were just literally being dropped out from left to right because of the fact that there was no business model. There was nothing sustainable about them. They weren't scaling. They were just ideas that were just pretty much invalidated. So when we say the dot-com like bust or the dot-com bubble, it's a lot different. And I think that it's kind of unfair that we're throwing the charts towards, we're using the charts as a model to look at the companies of today, because every single one of these companies today, well, not every single one of these companies, but most of the companies, they are actually literally doing it big in their fields, and they're actually dominating and showing that their business models have strong validation. So, I mean, just sidebar. Back to you, Jolene.
So I'm looking at my portfolio right now, or one of them anyway, and I'm definitely in XLY. I'm also super heavy in XLK.
By the way, we have a comment. Somebody said, if SMH is Bae, who's Side Bae?
We'll get to that later. You know, there's some contenders. No final decisions have been made yet. Everyone's on probation.
Sorry, this is cheating.
But yeah, so I'm looking at ARC for next year. I'm in a position now, but I really want them to extend their chain before I even make that kind of move, because right now it only goes to March of 2021. And as Che, you were talking about, like, that time, I like to have time so I can just chill and like look and strategize and be ready on those red days if I have, you know, cash on the side, or I'm looking at what positions am I going to shave, because I did a lot of shaving off of XLK, and I ended up, what did I do with that, the shave from XLK? Oh, I ended up getting into ARC, and then that went crazy, and it's still going crazy. It's going to continue to go crazy because I got it a while ago. What was that, Mark?
I said it's one of the best performing ETFs on the market.
Yeah, and it reflects in this portfolio, no doubt. So I'm gonna be, you know, hollering at Kathy and see like what I'm gonna do for next year. And I think it's looking more towards ARC. But honestly, y'all, like I feel like I'm coasting, honestly, because I already hit my end of year milestone that was set, or not even milestone, but goal that was set at the end of 2019. In the beginning of 2020, I already hit that. That was like last month. And then I set another, like a stretch goal, and I already passed that today. And so I'm just like, man, you know, one of these problems is trying to figure out what your next, let me get my water too, trying to figure out like what your next stretch goal is. I mean, it's wild. No, I'm just kidding. But no, seriously, I don't know what that next goal is. So I'm looking at some things. You know, I'm definitely doing my reading, my research, and getting a feel for what I think is going to happen. But honestly, Che, when you're talking about XLY, like, I believe you. I think XLY is going to be a beast, and I'm sure Mark has thoughts on that we'll hear, you know, a little bit later. So stay tuned. But yeah, I'm looking at the ARC suite of ETFs to see where I'm gonna you know, invest more.
Okay. All right. So we got some huge questions on the table.
Let's take a look.
So for example, we say, hey, quick question. This is from Iris. I hope in terms of taxes, if I plan on day trading as well as long term, what was the best way to set up my trading account? Roth, IRA, etc. Thanks for all that you do as always. Well, Iris, we thank you for being a wonderful supporter of us here at the Come Up. So let's answer that question. Now, one of the things that I mentioned in the Getting Started video, for those of you that want to check it out, for if you're new, we call it episode 1 of the Come Up series. And so we kind of mentioned this about not giving as much away that you earn in the process. And so how do you do that? Most people, they just immediately just select an individual brokerage account. I mean, many people have them. But when you use them, a lot of folks don't realize when you're in trades, like especially those short-term trades, like anywhere from the 1 week to, let's say, 6-month trades, or even 9-month trades, you're gonna have to pay heavy capital gains tax on them because they're considered less than a year. So your taxes are gonna be heavy. So that's not even including income or passive income tax. So what we suggest is, instead of you paying any of those taxes, why don't you find a brokerage that allows you to trade out of an IRA, whether traditional or Roth? We probably suggest traditional first. You have a traditional IRA, trade out of that, no capital gains tax, no income or passive income tax for the year. The only time when you pay any of the income tax is when it's time to make a withdrawal to your checking account, you know, when you do all that kind of stuff. But hopefully you're holding on to this for retirement. So by the time when you hit the retirement age, you have a very beautiful nest egg. So hopefully we answered your question successfully. We also had some other questions about, say, for example, how do you pick your strike prices?
Oh my gosh, I had so many of those questions.
Should I take this on, or do you guys want
to? Who's got this?
I answered that like when our first Facebook Live question. So one of y'all can.
Why don't we do? We'll all do a little snippet on it and see how we do this, because I think it's important to know how to pick your strike price, because there is a strategy to it. Mark, why don't you lead us into it, brother?
Oh no, you gotta play. You're the guest.
All right. Picking strike prices. First thing that I want to do when I'm looking at a ETF or even a singular position, go check out the 52-week high. If you find that it is sitting at its 52-week high, you know that it's already running really hot. This might not be the thing you want to invest in right now. My thing becomes, I want to buy something that's a little bit on the dip. It doesn't have to have red day that particular day, but I want a little run room before I hit its 52-week high. That way, when it hits that 52-week high and it pulls back, and you know, we're dating for a while, we got a contract in this, I get to run up with you. We get to build a solid relationship together. And I'm all about good relationships with my money. So check out the 52-week high, make sure it's got some run room. If it doesn't have some run room, let it cool off, then go ahead and jump into it. I think that's the first starting point for picking your strike price.
Can I actually give a little? I think it's time that we give away a key, shall we?
Do it.
Yeah.
I think it's time. I mean, you know, how about you, ladies and gentlemen, and possibly children? Would you like a
family show? The whole family's coming up.
Bring your family in. Sit the kids down.
So this is a rarity, but I'm actually pulling back the curtains for folks in whom which I want to kind of get an idea of how is it that I pick a strike price. All right, so let's go over here and share my screen. Hopefully y'all can see it. Please do not crucify me if you can't, but can y'all see it?
We can see it.
Yeah, but can you widen it out?
I'm zooming in. Now, we're gonna start off with someone's Bae.
Oh,
We're gonna take Bae today, shall we?
We shall.
All right, so then let's do this. Say, for example, you're trying to do a January 2022 position, right? You're like, hey, you know, I definitely want to definitely do some earning here. So I'm going to take this position and let's see what we can do here. So here's a 2-year. And as you can see, we're up 59% for 2 years since 8/03 of 2018. All right, very, very simplistic. All right. Now, I want you guys to pay attention here. Follow along with me because this is going to be super duper dope. All right, so let's say that, for example, for the 2-year, it's $64.05. Now, 5 cents, keep that. All right, so we're going to take the $64 and we're going to say, okay, hey, well, we're at 170. Now, if you guys can, pull up with me on your handy dandy calculators. Now, normally, if you're playing a 2-year position, your exit point is probably within a year and a half, right?
Yep.
So here's what I'm going to do. We're going to get a little fun with the math. I mean, I'm peeling back the curtains for everyone here. So this was the episode that you tell a friend that tells a friend. All right, so we have the $64. So we take the 64 and then we divide that by 1.5. That puts us at 42. Now remember, SMH is currently trading at 171 and some change. But we're going to just say $42 is the 1.5. We're just going to round it. We're going to round it to $43, and then we're going to round the SMH to 172 just to be on the safe side. So we're going to take the $43 and then add that to the 172. Notice, if you do that, you should be looking at a number of 215. Now, what we also like to do, just to, if you want to be on the even safer side, is multiply that 215, and then multiply that times 0.1. That's 21.5. We're going to just round it down to just 21. So take the 215 minus 21, 194. Now, of course, you could play it, say, for example, 5% dip. I typically take away, but you can find a healthy medium between 194 and 215. So if you're playing it in the healthy medium, then that's when you find a 205 and a potential 210 strike. Mm-hmm. See what I did there? Mm-hmm. True story.
Nice.
What are they saying? What are they saying?
Hit Mark with a voice note on IG, and he okay, yes. Yes, Keys, happy fishing, folks, for sure. Yep, shave off some, yes. So, I mean, that's typically a good key. And if you want to, you can go ahead and use bar chart, and they give you a wonderful 2-year chart. If you're looking at playing a 1 year, what you're going to do is, if you're going to play a 1-year position, you're going to divide that into 2. If you're playing, say, for example, a 2-year, you're going to play it at a 1.5. Hint the 1.5. If you're playing a 6-month, then you're going to put that in half, and you're going to divide that by 2. If you're playing a 3-month, then you're going to divide that by 2. Becomes so much easier. But, you know, preferably we like 1 to 2 year positions, and then ultimately hedge against our own positions. So that way we're not really losing money, but gaining money in the process. But there you go. All right.
I'm laughing at the chats.
So let's get into the real story, because, you know, now that we're in August and September, what are your thoughts on shorting companies?
Yo, is there one in particular you want to talk about, Mark?
I mean, you know, there's multiple.
In general? Are you grabbing our thoughts in general, or?
You know, feel free. I mean, today is the day that, you know, we say talk your stuff. So, I mean, you know what? Let's not leave any suspense here. Let's not get caught up in ceremonies. Let's talk about it, shall we? Let's just rip the Band-Aid off. Let's talk about NKLA and Kodak. Because many people wanted to know, inquiring minds wanted to know. Now, let's roll back the clock a little bit, shall we? Mm-hmm. So a few weeks back, I posted that I was shorting NKLA. Now, why did I start shorting NKLA? Was because of the fact that I saw that there was this gentleman by the name of Trevor. Yes, his name is Trevor. And he was talking in an interview and saying that he was better than Elon Musk. Better than Elon Musk. Like, put it into perspective. No other CEO has gone out there to say that they're better than CEO Elon Musk. No entrepreneur has gone out there and said, okay, hey, we can literally kill Tesla, and yet not have a vehicle, not have all these things. And for all those that know that I definitely ripped a new one into, let's say, NKLA. The other part that kind of astounds me that a lot of folks aren't really realizing is, a lot of folks think that Trevor is the CEO of NKLA. He is not. He is not the CEO of NKLA. He removed his CEO title and he became the executive chairman of NKLA. Now, keep in mind, there are also known as an SPAC company. Now, for anybody that's, say, for example, looking at, like, you know, what is an SPAC? Go ahead and Google it if you can. SPAC, you've probably been hearing about a lot of them. And they are quite the growing number, which is ultimately feeding towards the narrative of the bubble. That's your homework for tonight. I won't tell you. I'm going to teach you guys how to fish. So go fishing. Find out what SPAC is, or find out what the definition of SPAC means. But we're just going to say one thing: shell. That's your hint. And one of those companies that represents that is, say, for example, a NKLA. They are a SPAC company. So when I look at it into perspective, I'm asking myself, well, what is it that you're innovating? What is it that you're creating? Is there anything that you're doing that actually has a patent? Is there anything that you can do that can't be duplicated? I mean, you don't have any significant revenue. They say that every single pre-order that they do, they count it to $1 million, hence the 881 million. So when we put that into perspective, you know, you're just a glorified, you know, conglomerate supplier of things to make a vehicle. We haven't seen the battery. We actually haven't even seen the motor. We haven't seen the vehicle drive. The only photos that you see of the vehicle is the fact that it's just still CGI images. And we have to wait till December, but you're wanting investors to give you their money to say that, okay, hey, that this is a solid investment worth investing in. No, what you are investing into is called a business plan.
Idea.
Dang. Sounds like, oh girl, what's her name? Elizabeth?
You know, there was a person by the name of, there was a company. I'm not gonna name no names. I'm just gonna say there was a company by the name of Theranos. Now, you know, I ain't the one to gossip, so you know, you can go back and do your own research on that one. All right, so let's move on from Nikola. So I've been shorting Nikola 3 times, and and then there's also a company by the name of Kodak. Oh no, we're definitely gonna spit fire here. So we're definitely gonna spit fire. So for those of you that have been if you've been living under a rock, or if you've just been missing the news, there's a company by the name of Kodak that has been around since, I mean, God, since we were all born, or even before we were born. And they were a photo company. The problem is nobody's really cared about Kodak really since what, 1998? I mean, since when have you gone to the Rite Aid store or Walgreens to buy some film?
Right.
So their business model ultimately died out. The company was literally preparing to file for bankruptcy. There was actually reports about that. They actually sent out letters to investors saying that they're contemplating bankruptcy. And then all of a sudden they get this loan of, I think it's about $768 million. Now, mind you, that's not revenue, that is a loan to go from being a photography tech company to medical technology. So then the stock shot all the way up, and it's like, let's just be real. I mean, the beautiful thing about being an investor is that, you know, if we're going to keep it simple, I mean, we always say this, keep it simple, stupid. And if we're keeping this simple, and if we're keeping it straight up worth 100 with you, I'm sorry, Kodak, you are not a medical company. Johnson & Johnson does medical devices, and they do it very, very well. You are not it. And so somebody some people may have launched an investigation, which may have just recently been filed with the SEC, and also a current senator from a specific place in Massachusetts may be on this case to possibly find out exactly, are there some nefarious activities that are taking place involving politics and also kind of like manipulation of a stock as well as boosting a company. But, you know, what do I know?
It's pretty messy. But there's money to be made with all that.
There's tons of money to be made when you're shorting a company. So I have been shorting the company. I put out a $20, y'all know I'm transparent. So I put out a $20 put against Kodak for October 16th. And I also have 3 different shorts against Nikola, one at 60, one at 45, and then another one at 35. I'm probably guessing that the stock got hammered in its after hours after it reported some BS earnings report, in which that honestly, it feels like I'm reading an earnings report from Luckin Coffee, but you know, okay, I'm going to turn down the shade and I'm going to just pass it on to somebody else.
That is, we were just looking at, actually last night I was talking to Matt, head of merch at the Come Up. He was on, you all know him, Matt Reese. And he was talking about, we were looking at different companies. I wonder if he's here. If he's here, he could talk about what companies in particular he's looking at. But looking at the companies that have already hit like a 52-week high, or they're just high right now, and looking to see what type of performance they had in July. Like, was their July super strong? And now the first few days of August, they're starting to dip a little bit.
Yep.
So we're at the very beginning stages of formulating a strategy for shorting. But we still have to finish that conversation, because there are a lot of companies that have hit those 52-week highs, and I can.
Should we throw out another key?
Yeah, go for it.
Well, I just want to know, should we throw out a key, or should we give a gem?
No. Keys. I think the people need keys today.
Keys. No, let's do a key, but then at the end, let's do some gems too, you know?
Okay, all right. So
outfit. We get a full outfit.
Somebody said, can we go over puts versus calls? Okay, I'm going to keep it simple for you.
Yeah.
When you see a stock that has been running too high, and you know what, let's
look at those charts.
Let's go to our best friends called the charts, shall we? All right, so I'm gonna go ahead and line this up for us, and please don't crucify me if the contrast is too high. I've been working on this contrast, y'all, but for some reason it ain't trying to work with the player. All right, so let's pick a stock, shall we? Anybody got any ideas?
Well, let's take a look at, since you brought up Kodak, we could take a look at Kodak, but I'm also trying to think of another stock that
I got one.
Super short. Wayfair?
Wayfair, they talking about that.
Man. Okay. They were in some mess though. Okay, but go ahead. Let's talk.
They were. All right. So let's have some fun today, shall we? Because here's the thing that I'm looking at with, say, for example, these types of companies, which is very, very interesting. And Wayfair happens to be sitting in what we call the Russell 1000. So there's about a few companies that are smaller. They're not mega cap stocks, but I mean, they're decent, but they're not penny stocks. So they're somewhere in between, and they sit within the Russell 1000. The interesting thing about the Russell 1000 is that you have pretty much a vast portion of the companies since the fall in March. Like, for example, in Wayfair being one of them, look at this. Wayfair since the bottom in March 19th. Let's put this into perspective, people. It's up 800 and some change %. Let that sink in. Over 800%. So here's the thing that what we like to do with our wonderful, beautiful Bollinger Bands, shall we? And we'll just look at the 3-month. Now, remember what I've told you guys about Bollinger Bands. Now, if you're looking for, say, for example, some time when you look at things short. Now, of course, we see all this bullishness activity. Now, of course, we realize that when a stock runs outside of the band, it will retreat back to the band. It may, say, for example, also dip back to the midline. Now, we've seen this happen with Wayfair. Now, it's gotten out and it comes back in. It goes out briefly and then retracts back, and then here we are. So notice we've been trading within the upper side, which is letting you know that we're in a bullish trend. But what just happened? Wayfair broke out. Please tell me, where do you think this stock is going?
It's gonna snap back.
For those in whom which wear new era caps, yeah, it's definitely about to snap back. So, but I mean, let's look at it, right? Let's look at the tail of the tape. You can look at any company. Let's look at Apple, right? The beloved stock of the market. Every single time that you see a stock completely come outside of the band, it immediately will snap back. We see it here, it snapped back. We see it here, it's going to snap back. I mean, we can give more. I mean, let's look at AMD. Another beloved stock for the year.
Woo.
Snapped outside of the bands, came back. Went outside. Now, it kind of did some funky stuff, but even then, still came back. Now, went out, came back in. Went out, immediately came back in. Came out, back in, out, back in, out, back in. Think about it. Next case. So when you think about, say, for example, putting in puts, you can literally just use the Bollinger Bands as your guide. Now, is it a perfect science as it pertains to picking when? Unfortunately not, but that's the reason why we say that never play week-long positions or anything like that. The smartest thing that you can do is probably playing anywhere from 2 to 3 months in a put position, especially since we're sitting at highs. A lot of folks have been sitting there screaming and saying that the market is due for a 10% correction, to which, I mean, a lot of folks fear corrections, and they're very much so. They should be feared to some folks, in whom which that could be very vulnerable if you're playing short positions. But when you're playing the long-term positions, then it really doesn't really affect you. And that's whether you're playing long-term stock or, let's say, your call options for 2021 or 2022, preferably 2022. And then the beautiful part about it is if you're playing any of these long positions, the beautiful part about puts is you know where your position is at, you know where your position is performing. And then at the same time, you can bet against it. So for example, are ETFs exempt?
Nope.
No. ETFs are not exempt at all. So when they break out, they come exactly right back in. The beautiful part about them is that they still consistent. They give you some level of consistency and not as much volatility. When we want to talk about someone else's Bae, are they exempt? No, they're not.
Look how cute it is, though.
So it jumped out, came back in, jumped out, came back in. It just jumped out. It's definitely going to retract. Sorry.
It will. It's already down in the aftermarket.
It is what it is. So when we put this into perspective, y'all, it's like you're definitely, so for a lot of you that are asking, how am I setting my bands? I mean, literally it's at a 20 period with 2 pretty much standard deviations to keep it simple. And I set my field at close instead of open. I always wonder why is it that people do open, but I guess if you're doing short-term trades, then I guess open works for you. But we like to hold on to money and play it long-term, so that makes it simple. But those are literally keys. Like that is something that, you know, I challenge you, nobody is going to tell you as it pertains to this market. They're going to look at, say, for example, stuff like Fibonacci and all this other stuff and stochastic, which is not bad, but at the same token, those are technical analysis. And yet at the same token, what you need is actual indicators that tells you, okay, hey, is this my point? Is this where I get in? Is this where I get out? And so if you're looking at, say, for example, asking yourself, how do you exit out of positions also? This can also be a good marker for you, because if I always say play the year to date or a year, 2 year or 5 year. And again, the story is still the same. Now, of course, when we look at the 5 year, it's always going to be inside the band. But if you want a little bit more reality, play the 1 year.
Exhale.
Breathe. You know what? Honestly, that was the key that even I hadn't used, because my foot game sucks. But now, just so everybody can be really caught up on that, the Ballinger Bands is kind of guiding us along that decision-making process. Mm-hmm. And I love the fact that it was broken down. So as long as we know how to set these things into Ballinger Bands and we set it towards our year, even if we're looking at longer term, like a 3 year, 5 year, or 6 month, you're giving us that key of, okay, you kind of got a get in point and a get out point for when it's broken out. Like Apple's a prime example. If anybody just looked at Apple and you saw it was way outside of the Ballinger Bands, what's going to happen? Now, how long is it going to happen for? Nobody's giving you that. But is it going to happen? Strategically, if we're just looking at the technicals of everything, which that's what this show is all about, helping you get your come up. Yes. Nothing's going to go against the rules and just keep climbing and be hot forever. I think on the episode that I first came on, and I was like, the market is not your friend, but the technicals are.
So we got Matt Reese in the comments, and he said it was Zillow. So can we look at Zillow?
Of course. Are you gonna take over the comments so that way I can?
Yeah, I'm keeping up.
Well, y'all. Let's go year to date for this one. They had quite the tumultuous year. All right, so looking at Zillow, as you can see, they broke out early on, and this is like pretty much pre-COVID. So, I mean, and then they just completely broke down because everybody was afraid that real estate would kind of suck. But then we started hearing good news about real estate, and then ultimately, I think this was around the time that we heard it happen, and then they broke out, and then immediately came right back in. Now, of course, we can also spot levels of support here, guys, because if you look here at, say, for example, April 29th, and then trace it all the way back to, say, for example, March 10th, that means something when we're talking about support and resistance. So we broke out past it, and look at where we came to. We were here on May 11th, came to, say, for example, the same level as February 28th. Now, if we fast forward, we never quite broke out above that period. But notice where we keep coming back down to here. And then we're still within that range. We kept toiling within that space. We never broke past it yet. And then here we are, still within that range. We came higher, we just broke past it. came a little further, but came down to settle exactly on the line on July 28th. We come all the way back here to February 21st. Look at that. We broke out again, new level. We came back within range. So we snapped back. In my opinion, in my humble opinion, Zillow is probably looking to go for a potential another run.
So Matt Reese, we're paying attention to that. We have several comments.
Go for it.
Someone said, sorry, y'all always say someone says now because sometimes your names aren't like your real name, so it's kind of awkward. So someone says, please send a cash out because Google is playing games. So you can go to lifeenrichmentgroup.org and I believe you can donate just straight away there if you're having issues that way. Someone said, just read that the Fed is planning on ramping up inflation. Does this affect your opinion on the future behavior of the market?
No, and the reason why I say that is because the Fed is ultimately making sure that rates will not go to zero or will not break below zero, so no negative interest rates. Of course, the dollar will continuously take a dive, but then at the same token, that's what's giving a lot of folks that are trading gold, that's what's giving them a major argument, because when the dollar goes to crap, then gold goes higher. But at the same token, the fact that they keep giving the market steroids and propping up this market, especially for underperforming companies, then the rally will continue to rally on. The only thing that can stop the rally is pretty much if we find that there will be no deal, which is allowing a lot of folks that are trading on Robinhood and all these other platforms and doing fractional share buying. It will stop the moment that the liquidity stops, and if the government does not come up with a way to bring forth stimulus as well as helping folks within unemployment, yeah, that's going to definitely change the game.
Another question, do you buy in the money or out the money for put plays?
So naturally, I buy out of the money, but I typically like to say near the money. I play very, very close, but then I play well within range. So I'll pretty much play within 2 to 3 clicks. But if it's something that I'm thinking long term, like for example, my 60 call goes all the way to December, my 45 call goes to September 18th, and so is the same thing for my 35. So I'm probably going to be looking to get out of those, but my 60 call is going to remain Bae for sure. And yeah.
Okay, another question. How is that different, meaning the Bollinger Bands, what you just went over? How is that different from using the RSI?
So RSI, and just for those in whom which that want to definitely follow along, I mean, we'll go to bar chart because they have this beautiful thing on there, and I guess I'll do that today. We'll take Apple as a company to look at, and so
oh, never mind, it's good.
They have what is called the trader's cheat sheet. So where you can kind of see it is that we kind of hit that first pivot, the pivot point resistance point where we reached the day high, literally 3 cents off. And then that's what allowed the stock to retreat. But if I remove all the other things off of it, like the Fibonacci, stochastic, and pivots, right? Look at where we are in between RSI at 70%, in between 80%. So for anybody that understands the relative strength index, when you get above 60, that's letting you know that the position or the stock itself is overbought. Mm-hmm. Thus, I mean, the biggest thing is if you're just not accustomed to like going to look at it or trying to do the calculations to find the RSI, a good way to look at it. And the beautiful thing about the Bollinger Bands is it explains so many things without you having to look through so many different sources. So for example, if I'm looking at the Bollinger Bands, it tells me where the volatility is. So it's telling me that when it swells, there's volatility. When it snaps and it's very tight, then that means that there's very low volatility. It's telling me that. It's telling me the high, median, and low of where the stock is where it's trading. If it's at the bottom part, then that lets me know it's in bearish territory. If it's in, say, for example, on the top side, it's much more in bullish sentiment. If it's trading across the midline, then I mean, it's just toiling for position. If it breaks outside of either one of the two, then it's telling you that it's going to snap back in. And that's why I said I just got all that with just using Bollinger Bands.
All right, there's several comments or questions too. So we got a couple of requests. One of those is, can we look at SPI? And then someone, Cashmatic, the homies, said, it's good to draw a box for support and resistance. That's a good tip.
Yeah, that is. What am I looking at? SPY?
Yes.
Okay, so pretty much the S&P.
Yes.
Okay, what am I looking for in the S&P 500? I mean, we're saying that it's pretty much toiling across that top line. I mean, which makes sense because the S&P has kind of been lagging a little bit thanks to what's been happening to some of those Dow companies, as well as some of those major some of the same Dow companies that you'll see that they're also part of the S&P 500. So it's not all tech. But interesting thing is, again, they're not exempt either. At the same token, we bounced off of this line, which was the last high point that was actually support, where we actually pinged the support level. So we hit a high point here, and then we bounced back down, and that traces all the way back to, again, June 8th. And then we bounced up, and then that was the support level. But we're toiling across that high median line. So if it breaks beyond that, so if we get this roaring rally tomorrow, which kind of hope not, but if it does happen, then it happens. But if we get it, then rest assured, this will be snapping back.
So we got a super chatter. Austin, appreciate all y'all do. With short season incoming, can y'all break down an example of hedging a long-term call with a short midterm put?
Yes. So say, for example, if you're doing a long-term call, let's say XLK 140, January 2022, that's a long call. Now, as you're seeing that the position itself, I guess I should go back to the chart. Let's pull it up. So seeing, for example, that you're playing the XLK long-term call. Now, as you can see, it's trading well with outside of the range. What I would say is, like, now I'm looking for, when I'm seeing this, now I'm looking for where is the nearest, say, for example, potential support. And I'm seeing that at probably the 109, the 109.50s. So I'll probably say 110 just to be on the safe side. So I would go from 113 to 110. That's about $3 off. Like I said, near money. And like I said, I'm typically playing this for, since it's short season, and short season is naturally around August, around this time to pretty much mid-September, sometimes late September. So I would definitely be doing a 3-month put, because around October, you're typically seeing folks, especially Wall Street, jockeying for position going into the holiday season. So you'll start seeing some buying, and you start seeing buyer activity pick back up. So I would do, say, for example, a 3-month put, knowing that I would be probably getting out in a month and a half. If that makes sense.
All right.
Month and a half. So that's about, what is that? That's about 75 days.
Mm-hmm.
We have several different chart requests too. We got a request for Gush, Gush, and Adobe.
Oh, I know. See, somebody's calling Adobe because they heard that, you know, Dark Knight coming out of Gotham over here and like dropping, like, you know, little Batmobiles into the street and everything else, like little batarangs. All right, so let's look at Adobe. Great company. They've been doing exceedingly well, but the stock is slightly corrected over a period of time. So it tried to come back up towards that area of support, but it couldn't break through it. So it came back down, and it's kind of like just been toiling within this range. It's trying to do the same thing, but I feel like it's kind of like plateauing. It's kind of like waiting around, and you typically see this right before a stock is getting ready to report its earnings, but there's a lot of bullish, there's a lot of bearish sentiment, which Yahoo is trying to tell us on the short term for the stock. And I think that that's what we see here, all this activity. And you typically see short. So typically, here's another thing that you could look at as an indicator. When a stock is technically in correction, you will naturally see that short term and midterm. Because when you think about a correction goes anywhere from roughly 30 to, I mean, in some cases, 75 days. Since the market has had algorithmic trading and everything else, it's gotten a lot faster. So we kind of like narrow it down to 30 days. But the stock is in correction. But in a long term, I think that the stock is going to consistently just do well. And I think that it's going to be going higher. I would be focused on this one as it pertains to a January, or yeah, definitely a January 2022, but it can be expensive. And I would probably say look towards other positions that probably have, or other ETFs that have Adobe in it. But if you're looking at a company to hold, they're definitely good. One of the things that a lot of folks don't know about Adobe is that they go beyond the scope of just Adobe Photoshop, Illustrator, and all those other good things. They acquired a company by the name of Magento. And Magento was a sales platform that was pretty much its major clients was the NBA, the NFL, the MLB, NHL, pretty much all sports. And they also have other areas where they're in higher end retail as well as large stores. Well, what's holding them back is they're not bringing in that same type of revenue because those things are not here. And that's the reason why you see the stock really not performing as well as its other counterparts. But make no mistake about it, don't count Adobe out. I think that this is definitely a stock that you would definitely want to have to hold for the long term.
Alrighty. Someone really wants you to look at Gush.
Okay. We will look at, I see Gush, I see people talking about Gush all the time on EYL. Mm-hmm. They want to talk about oil. And here's the reason why we don't talk about it. The tail of the tape, people. What is the one thing that I say about charts?
They tell the truth. They don't lie.
They don't lie. That's like saying like this, investing into something like this is kind of like, okay, you're trying to make this bet that, okay, hey, that oil is going to make this huge run up. But in reality, the tail of the tape says, play it. It's just not there. It's just not there. Now, of course, I'll be fair. I will be 100% fair. If you're looking at it for, say, for example, we're already at the 34. Our next level is the 35. Let's play 3 months. If you're looking to say, okay, hey, we're going to get back to this 67. If you've got the time, literally stay within this position and to realize that also the industry is changing from oil and gas to other areas of energy. That's the reason why nobody talks about Gush. But if you've got the patience and the heart, then go for it. But honestly, this is not a position in which that I can wholeheartedly, as well as within my right mind,
question mark,
say that this is a good position or this is a good trade. Go for it, Jay.
Would you call this, so looking at this graph and seeing the 60-second come up video, would you call this a bad company or a bad stock?
Well, so technically this is not a company because it's pretty much, it's an S&P oil and gas. But if I said, okay, if I had to choose between a damaged sector versus a damaged, if we're looking at it in truly in its perspective, if we're looking at a damaged sector versus, pretty much just a bad year, I'm going to go with the prior and say that this is a damaged sector. And it's only going to get worse as we see more renewable energy players step into the space. And like, for example, you have solar, which is going to be huge. I mean, somebody's trying to make something for hydrogen, but we're not going to talk about that. Read them right. So next case. But you have so many other areas that are really starting to make some significant headwaves. Like, for example, you have Tesla that's powering Hawaii right now. Like I said, next case. I think that for this one, to quote a good friend of mine, this is dead.
So, first of all, did not realize the time. It just flew by. I looked up, and normally I pay attention to the time. We're already at 6:09. We do have some requests for Fire Eye and Overstock.
Well, let's look at Overstock. As you can see,
Come on down.
Yeah. So overall term for it is very bullish, but at the same token, it's coming down. Do I think that it's overvalued? Yes. Are people buying? Are they buying so much stuff to fill up their spaces due to COVID-19? Yes. Somebody's saying, Mark, well, how did you know that? 2 years. The last time that it was at these levels was back in 2018. 2 years later, here we are. We're threatening these levels, and for all I know, it can challenge this. But from what I'm seeing in this chart, it's running a little bit too far away from, say, for example, the fundamentals as well as the valuation, and it's getting a bit stretched. So will history repeat itself? In my opinion, yes. What was the other one? FireEye?
Yes.
Okay, so let's look at FireEye as it pertains to the year. Let's look at year to date. Overall, decent year. They had a decent little pullback. Do I see some more upside for this? Yes. Will it have to break out? Yes. And I think that the level for it to really truly break out, it's already pinged the support level at the 1508. But in order for it to go to the next high, it's going to have to get past the 1582, and then the next level is probably the 1646.
Alrighty. Let's see. Oh my gosh, we're not going to be able to obviously get to everyone's.
No, but the good thing is like if you're looking at what we've been able to do and where you guys are able to see it, the beautiful part is the charts, one, they don't lie. And honestly, you can come back and watch this video and use it as reference as you're looking up your other stock tickers. We dropped some major keys in here for you, so that way you can look at charts. Hopefully you see charts differently. We taught you how to pick your entry points into, say, for example, into an option trade. We taught you how is it that you should be looking to when you should be shorting a stock and how you should technically short it and how you should also buy a call. So these are all things in which that you can come back and literally pretty much back test against any other positions that you're looking at going after. I mean, we strongly disregard against going for playing weekly positions because honestly, we want you to keep your money and not be at such a high risk. Of course, all the things that we talked about are things in which that we would do. We challenge you to definitely go to do your own research. None of us are financial advisors. We're definitely trying to win in this market as it pertains to traders, but we definitely urge you to look at what we do, but also take it with a huge grain of salt and to do your own research for sure. And then also, if you really need to, seek a financial advisor. But like I said, financial advisors would probably get you only 6 to 10% year over year. But what do I know?
Well, one thing I do want to clarify, because this question came up a lot of times in the comments, is when you're looking at the option chain for either the put side or the call side, when Mark said ticks, he's literally just talking about the different strike prices. So 1 tick, 2 tick, that's from the money.
1 strike, 2 strike, 3.
Yeah. So that's what he means by that. I saw that a couple of times. But
well, yeah. I mean, this was fun. I mean, I think we dropped this is just a teaser of more things to come, but we try to give it to you in as much information within this hour session. And clearly you could see my dog literally just living his best life. But thank you for having us. And Che, like, where can the world find you? Like,
where are you at, brother?
What are you doing, by the way?
What am I doing? What do you mean?
Outside of trading, what are you doing with your life?
We are making a film project. So we're currently looking into reshooting some of the shots from the film, and we might even do a little bit of traveling, get some Alaska shots in, go up on a glacier. Getting a little exciting and a little scary as well. Got a quarantine.
Black man on a glacier, right? All right.
Hey, you gotta do what it takes to get these shots. But they can find me on Instagram at L Che Davis, ELCHE Davis. That's on Instagram. And yeah, I look forward to showing everybody the trailer when we're ready for it.
Oh, and by the way, since we didn't get to do this, I mean, can we do a portfolio check? I mean, you know, everybody, inquiring minds really wanted to know, like, you know,
hey. How are we doing this? How are we doing? We want to send.
Go ahead. You're the guest. So,
you're the guest. So
I mean, how do we do it?
Do you want the come up to post a photo? Or
here's what I'll do. And then Mark, if I send you the picture, can you post it? Can you? Of course you can. So what I'll do is you want me to email it to you or what?
You can text it to me.
All right. I was already prepared for this because I knew there was going to be some wild card thrown at me. So I was like, let me prepare everything for the team. Okay, but portfolio wise, so Jolene, I want you to get in on this too. Like, I'm trying to crush this one. So there's a reason I'm super excited about XLY. And I want to make a legendary moves that may even rival the Dark Knight himself in a position.
Coming for him.
You know, now when he posted up there, you guys will see. But I've never done this before. And like you were saying earlier, like climbing that mountain. And I'm a big fan. I watch a lot of motivational videos when I'm in the gym.
Yes.
When you climb to the top of the mountain, you got to find another mountain to climb. Like we're out here just climbing mountains. So when Mark pulls up this particular percentage that I'm super excited about to see where it's going to go, I'm definitely looking to hit the 10K% return. So stay tuned.
Oh, you're going for the Dark Knight. You're going for the Dark Knight and Bobby Axelrod. Okay.
I'm coming for it. And this is look, when I hit it and I nicknamed myself the Vision, you had to see it before it happened. Okay? You had to see it. Now, it's gonna be a long road.
Yo, man, I'm about to text them right now.
1,000 on the return.
All right now.
Are you in on this too, Jolene?
Yo, I'm trying to get to the let's see, last year it was over 900% return. So I'm, I like to do incremental steps, you know what I'm saying? So for me, I'm trying to hit the 1,000. And what I've noticed is that I'm not staying in my positions long enough. Like I keep bobbing and weaving and moving because this market is just so, so I just got to make moves. I got to get in where I fit in. So percentage wise, I'm going to stick with the 1,000. Once I, hit that, then I will increase it to, I don't know, maybe 2,000, but I'm hitting my actual dollar figure goals. So I'm cool with that. Like,
I'm just going to say this, man. I've seen the Dark Knight's portfolio, some of his burner accounts. I'm just going to say this, man. It takes a great deal of discipline, like some John Wick type discipline to match up to the Dark Knight.
Hey, willpower.
No. All right. But I'll let them know the challenge. And for anybody that, we may actually, initiate a challenge with, maybe do a come up challenge. If you can beat the come ups portfolio when they set up a portfolio, if you could beat the come ups portfolio, you may just take home the winnings.
Oh,
you never know.
Money on the table.
Fun.
Money on the table.
I might have to compete against the
Hey, I'm coming. Can we use current positions?
Right. Forget that fine print. Okay. Let me get some.
It has been real. We had such a fun time with Che. Che, you know that you are more than welcome at any time to join us. We love you. You're also the producer for the Come Up. So when I'm working on all these episodes, he's the one that's in my ear forcing me to do XYZ, him and Jolene. So brother, you are always welcome. We always want to hear what you got to say. I mean, we definitely can't wait for you to do your like money gun thing like Jolene for sure. Man, thank each and every single one of you also for being supportive of us on this journey. I mean, today, I think we hit a major milestone of over 700 viewers that were watching, as well as over 400 likes on this. I mean, please share this link because we're definitely trying to get the message out. We dropped a lot of keys in here. I don't think that we did very many gems, but the keys were more valuable than the gem because the key, you know, that gets you the house. Until next time, who knows, I may show up in the after hours for the come up, but thank you guys for rocking with us. Until next time, I'm Mark Monroe.
I'm Jolene GC Money Gun all day.
I'm Clay Davis.
And this has been your come up. See you guys on Thursday.